Well, let's focus on the big earnings that came in yesterday. TCS, Tata, Elxsi, both of them reported numbers. We have Manik Taneja, the Executive Director, IT Service and Internet at Axis Capital, who joins us on the show. Hi, Manik. Good morning. Hope you're feeling good. It must have been a busy evening yesterday. But tell us about how do you read the numbers, the TCS numbers first. The stock went into the numbers at the low point of the day, which actually could be a blessing. The commentary seemed a little bit positive, and it seems the street could latch onto that. Your view on the stock?
Good morning, Nigel. Thank you for having me on the show. So certainly the stock's been weak in the run-up to results, and thereby that could drive some up moves in general. That being said, we reckon that TCS's relative growth underperformance for compared to tier 1 peers is likely to stay into calendar year 25/FY26, notwithstanding the positive commentary, given the fact that the absence of BSNL revenues next year will be a big drag at company-wide growth, and because of which TCS will fare relatively poor compared to the likes of Infosys and HCL Tech on revenue growth in FY26.
Okay, all right. And what's the current rating you have on TCS?
So we have a reduced rating on TCS. Our preferred tier 1 peers or tier 1 picks are Wipro and Infosys. That's how we position.
Okay, all right. Wipro and Infosys you prefer in comparison to TCS. Got that. What about the mid-cap space? Tata Elxsi's numbers were weak. The stock has seen a sharp correction from the top, as has been the case with the KPIT Technologies as well. Your comment on this one?
So Tata, almost all the auto ER&D companies are likely to essentially see a soft performance for the foreseeable future. I would say the rate of change in general for auto ER&D companies should be negative over the foreseeable future compared to the fact that rate of change will be positive for IT services companies. And in that backdrop, the ER&D valuation premium should continue to come off. And even for Tata Elxsi in particular, for the last couple of years, their growth had been supported only by the automotive vertical. They had been struggling in the other two industry segments. Even if one were to bake in a growth improvement from these industries in FY26, the slower growth on the automotive side will mean that Tata Elxsi will likely post another year of possibly a mid-single digit growth at best. And all these things will essentially mean that multiples will continue to come off for Tata Elxsi.
Manik, hi, good morning. Is there a tactical kind of a trade here in IT services, and which would the stocks be really? Which one should look at?
So I would reckon that the likes of Infosys and even Wipro, relative to where the expectations are, should fare better with the upcoming earnings, and that's where I would rather play those stocks over the likes of TCS and even possibly HCL Tech amongst the tier 1 peers. Amongst the tier 2 names, the names that we like are Zensar, Sagility and Firstsource.
Okay, Zensar, Sagility and Firstsource. Is it possible at all that maybe, with all this focus, Manik, on the US in a big way, it becomes a slightly macro-ish kind of a trade? Or you think the sector is just too large for that to play out? And people will just wait for actual numbers to show up? Your sense?
So certainly that macro trade is valid. And I would say the rate of change in the sector essentially, certainly with the way things are placed, look better into CY25/FY26. The challenge that we face when it comes to India listed names is that most names trade at par or at premium to last 3 or 5 year averages. Global tech services offer better risk reward given the relative price underperformance or compared to Indian IT, and the fact that those companies trade at lower multiples compared to their own historical levels. So if I were an investor who could buy tech services in India, could buy tech services in the US, I would rather play the likes of Accenture, Cognizant, or Capgemini of the world, or even the EPAM and Davos Globals of the world on a relative basis.
Okay, got it. Manik, we'll leave it there. Thank you very much for joining us and running us through. what you would do in the IT services space and what you wouldn't do. So we'll see, as Manik said, maybe off of the TCS commentary and results, etc. Maybe Infi and I think he said HCL Tech perhaps better placed as tactical trades.